Good morning. It's Market Day Report. We're so glad you're with us as we start a brand new week and a brand new month. We'll open up the trading session in less than 15 minutes. But what about the overnight session? What did we see? Let's go to the markets. Corn market is where we start, a little higher at the 3 1/4 higher on the old crop. New crop gained a penny in the overnight session, 439 1/2. What about soybeans? Following up a lower day of trade on Friday, bean market in the red, 10.22, down 4 3/4 cents. Soy meal contracts after a lower trade Friday, lower in the overnight session. What about soy oil? Well, it reversed its trend from Friday and moved higher after 3 consecutive sessions lower. Of course, those are daytime sessions, so we'll see where soy oil moves today. What about the wheat market? In the overnight session, wheat up 11 3/4, 545 3/4 for hard red. It settled the session on Friday higher and gained another 11 3/4 in the overnight at 545. Spring wheat contracts were higher as well, and the cotton market has settled lower 4 consecutive sessions, but got to bounce higher overnight, 68.67, up 92. Let's go to Springfield, Missouri. President, Midwest Market Solutions, is Brian Hoops. All right, Brian, we start the week. What will you watch?
Hey, good morning, Tony. Well, I did a little driving over the weekend up to Kansas City and back. And as you get closer to Kansas City, the crops look better and better. So they look real good. They've had less rain than we've had. And part of the reason why we're seeing this big rally in the wheat overnight is there's more rain in the forecast for some of that hard red wheat belt areas. This crop is trying to ripen. The heads are golden brown and trying to ripen in here, but when you get moisture on top of that, and we're talking maybe another 2 to 7 type inches of rain through this weekend, that's just too much rain for this crop to handle, and it could hurt the quality of that winter wheat crop. So this afternoon's crop progress report is expected to show the first soybean ratings of the year, maybe close to 70% good to excellent, should show an improvement of corn, spring wheat, possibly the winter wheat, although I think that's more likely to be more of a steady, even possibly lower rating once that comes out this afternoon because it's had so much rain here recently, and there's more in that forecast. And that's given us a lift to that wheat market. It's helping the corn market to come off its lows while soybeans are trading lower in here. It doesn't sound like we're very close to reaching agreement with China, and the soybean market is going to be disappointed with that. And of course, watching what goes on as far as talks go through the rest of this week. And it does look to be a fairly active week as we have a census crush report today, of course, export inspections, crop progress this afternoon. And then also you have surging crude oil prices and natural gas prices overnight. Ukraine retaliated against Russia and dropped a bunch of drone strikes in Russia. And you have OPEC members, OPEC Plus, actually agreeing not to increase production levels as it was rumored last week. And now we're seeing a surge in that crude oil market here. And that's probably an attempt to help Russia as far as prop up oil prices there, help their funding efforts in this war, and possibly hurt President Trump as well, as he wants lower energy prices. And we're not seeing those translate into today's activity.
Yeah, 63.82 last check here, up $3.03 a barrel. All right, Brian, hang on just a moment. We'll come back. We'll pick up our conversation on livestock futures. Market Day Report continues in a moment. Let's talk cash cattle for a moment. Last week in the South, 223 to 225, North 234, 237, and dress 368 to 375, but mostly 370. It was also a very light week for harvest, and some reports say it might be the lightest week we've seen in a long, long time. What about live cattle futures on Friday? Well, we did settle in the red as the June contract slipped a nickel to 215.47. August 209.35, down 72. Let's go to feeders. What happened there? It was a lower trade as well. August 298.82, down $1.10. And then the hogs. Hogs were higher on Friday, bumping $1.30 higher, 101.32. Now look at those three contracts, June, July, and August, all above the $100 range, with August leading the charge at 105.02, $1.62 higher. Let's go back to Springfield, Missouri. Brian Hoops. Brian, cash trade pretty strong. So what are your thoughts here?
Yeah, it was real strong last week, and I think we're going to see more gains added this week. So in the north, we were basically 234 to 235 live. Dress trade was 365 to 370, $4 to $5 better on a live basis, 5 to 10 on a dress basis. Southern Plains not as strong. We're closer to 322 to 323, which is a $2 to $4 better than the prior week, but very strong cash numbers. And the positive is the cutout values are responding as well. We had a very small kill on Memorial Day. I think it was the smallest since like 94 or something like that. It was a real small kill, and that kept last week's kill schedule lower. So boxes responded positively. We added over $5 in the choice, about $4.70 in the select. So that keeps our margins for the Packers in the red, about $92, $95 in the red, still a negative number. And there's really no end in sight to this. We are not rebuilding this herd anytime soon. We don't have bigger supplies coming. We're in the peak of the demand season right now. So it looks like feedlots still have the upper hand. We're going to try and move this cash markets higher. This week we have option expiration for the June contracts on Friday. A week from today would be first notice day, and just very little chance of any deliveries to be even thought of at this time.
Okay, Brian, I want to switch over for just a moment to the hog trade as well. You know, we now have three contracts above $100, and then that October contract, I mean, we're talking what, I've lost my track here, 27, is that a $27 discount there? Anyway, it's quite a discount to that August contract, that October. Why is that happening?
Yeah, we normally see a discount for the summer months. One, because of the grilling season, the key demand period for hogs, of course, is going to be during the summer months when we're grilling more, eating out more. However, there's also supply issues at work where you get more supplies of hogs in that October, December timeframe. You know, they made, I think, October pork month for a reason, because you have so much supply and not a lot of demand. So you usually don't get a lot of premium in October timeframe. So there's going to be a huge disparity. I think the hog market may react to ideas such as the soybeans did, that this agreement with China is not going to be reached real time anytime soon. Things are not going very well. They may start to set back today and this week as well, because of concerns about longer term demand trends on as far as exports go, particularly to China.
Yeah, and by the way, it's a $17 discount. Brian Hoops, Midwest Market Solutions, here on a Monday.